If you're a small business owner or freelancer, paying yourself can feel confusing. Your business is your money, but it's also your business's money. How much can you take? How often? And what about taxes? Welcome back to the channel. If you're new here, I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Be sure to subscribe to the YouTube channel and turn on all notifications. And don't forget to check out our blog site where we post every Monday, Wednesday, and Friday. Today, I'm going to walk you through exactly how to pay yourself in a way that's simple, consistent, and stress free. No accounting jargons, just plain language. The first step is understanding your business structure. Why? Because how you pay yourself depends on it. So the first one, which is probably the most common when knowing your business structure, is a sole proprietor slash single member LLC. You don't technically pay yourself a salary if you're set up this way. You take what we call an owner's draw. So basically, you're just moving money from your business account to your personal account. Next is a partnership or a multi-member LLC. In this setup, partners take a draw or a distribution based on their partnership agreement. And then last but not least, we have an S corporation or a C corporation. Here, you pay yourself a salary and sometimes take additional profits as a distribution depending on if you're an S corp or a C corp. We'll get into that in another video. Just remember, your business structure sets the rules. If you're unsure, check with an accountant and it'll save you headaches later. Before you transfer any money, look at your business cash flow. Ask yourself three simple questions. How much does my business bring in each month? What are my fixed expenses like rent, software, or insurance? How much do I need personally to cover my bills? Start small and pay yourself consistently. You can increase your payments as your revenue grows. There are two main ways a business owner can pay themselves. The two main ways to pay yourself is through an owner's draw or a salary. Let's look at owner draws first. This is mostly for sole proprietors and single member LLCs. What you're going to do is you're going to transfer money to your personal account. Taxes are paid on the profits, not on the draw itself. So, if you are a single member LLC or even sometimes an S corp, you can find this in an S corp as well. What you're doing is you're just going to take money out of the business as much as you need on a consistent basis. And then you'll pay the taxes on that at the end of the year based on the profits of the business, not so much on the draw. Now, let's look at salary. This is common for S corps, C corps, and C corps. What you're going to do is you're going to pay yourself like you're an employee with payroll taxes withheld. And additional profits can be distributions for S corp, or if you're a C corp, we'll look at that as like a dividend. They got different rules for S corps and C corps. We'll get into that in a different video. Remember, keep your personal and business accounts separate. It makes accounting and tax time way easier and stress-free. Step 4 is to be consistent. Paying yourself randomly can be stressful and confusing, especially at tax time. Pick a schedule, weekly, bi-weekly, or monthly, but be sure to stick with it and be consistent. Even if it's an owner's draw, treat it like a paycheck. Keep records for your own clarity and for tax time. Paying yourself doesn't mean skipping taxes. So on the owner's draw, you pay the taxes on your business profits when you file your personal return. That's going to go on the Schedule C if you're a single member LLC. This includes income taxes and self-employment taxes. So when you go to fill out your Schedule C, there will be a line item for draws, and that draw will go as an expense. And you won't pay taxes on the draw, but instead you're going to pay it on the business profits at the end of the year. And then for a salary, the payroll taxes are withheld automatically, but the distributions have a separate tax implementation. So the payroll taxes, if you're a S corp or a C corp, is going to be treated just like you would if you're a regular W-2 wage employee. You have your expense, your salary expense, and your payroll tax expenses on your business's income statement. But if you take a distribution, that's going to be a little different. That's going to hit uh, the owner's equity and all that good stuff. Here's a good tip: set aside about 20 to 30% of each draw or paycheck to cover the taxes. It will prevent surprises come April. Your first salary or draw may not be that huge, but that's okay. Just the fact that you're in business is what really matters. As your business grows, you're going to want to reevaluate how much you can comfortably pay yourself. You also want to consider maybe giving yourself a bonus or a profit distribution. And then remember to balance reinvesting in your business with paying yourself fairly. Your business exists to support you, not just to survive. So make sure you adjust as you go along and grow in your business. Alrighty, let's recap. Remember, understanding your business structure, that will determine the rules of how you're going to pay yourself, whether you take an owner's draw or you pitch yourself on traditional payroll. Know how much your business can afford. You don't want to stress your business out by trying to live a lavish lifestyle before you're really bringing in the big dollars with your business. So understand what your business can afford to pay you. Choose a payment method that works for you, whether that's a draw or a salary. Just choose a method that's good for you. And then remember, be consistent. Put yourself on a monthly, bi weekly, or weekly pay period. But whatever it is, just be consistent and make sure it's the same amount during the same period that you choose. Remember, don't forget to set aside money for taxes. You want to set aside about 20 to 30% of of that draw to make sure that you're saving wisely for the end of the year so there's no tax surprises come April. And then don't forget to adjust as your business grows. Your business is there to support you and your lifestyle. So, as it grows, make sure you pay yourself fairly. Remember, paying yourself is about clarity, consistent, and respecting your work. Do it right, and your business can support both you, your life goal, and your life goals. If this helped, hit the like button and be sure to subscribe and share with another freelancer or small business owner. Paying yourself isn't complicated. It's just about creating a routine that works for you and your business. Next week, we will dive into how to forecast business revenue.